Hello, this is Intermarket Analysis, Mr. Adil, bringing you a review of the FTSE 100. It's Tuesday today, the 25th of March, obviously going into the 26th of March for Wednesday's trading. Okay, I did say I was going to do a daily video. I'm trying my best right now. I'm just inundated with, obviously, first and foremost, obviously it's trading and everything else comes afterwards. So it's been hectic. I mean, I've got two services that I run. I've got the fundamental analysis service and the live analysis service. Updating that, obviously Twitter as well. I'm getting numerous emails. Mentoring, very busy at the moment with mentoring as well. Obviously, you've got a family with two, so trying to juggle everything, it's just it can be a nightmare. Okay, so I will certainly try my best to do a daily video from now on, just to give some sort of insight and advice, more insight, to be honest with you, or into my own trading basically. Okay, so let's go. Okay, what's happening with regards to the fundamentals? Okay, so fundamentals today, basically the FTSE itself rallied on the expectation of a lower inflation number. So basically, this morning I didn't expect a massive rally until the data was out, but obviously a lot of individuals front running that. Obviously, new numbers were leaked, as you can see from the outset. Boom, off we went to the races, and we certainly didn't look back. Let me just bring up another chart given regards to FTSE. Okay, 10-minute chart. So yes, so basically, as you can see, gap higher, and obviously the markets didn't look back. So impressive move on the FTSE this morning. Now let's just have a look what we can see, any sort of particular levels that we're looking at or observing here really. Obviously the only level that you're really forced to focus on going forward now would be the gap that's been left, the unfilled gap here on the FTSE at 6520. So watch out for that level. That level certainly needs to close. Just for the record, I mean, I'm always transparent and try and be honest as much as I can. Right now, obviously my bias right now is short, and I am short with subscribers on the live analysis service. So just to declare that in advance, obviously, because as a trader you can always have an inherent bias, and that obviously feeds through in your insight and outlook onto the market. So I'll just clarify that I am short the FTSE at 6610, expecting a move south. Okay, going into Wednesday's trading, so certainly bias bearish. I also have a short Aussie, and I also have a short on the Nasdaq as well, just to clarify. Okay, so basically what happened basically overnight. Okay, overnight Asian markets were flat, Nikkei was down, so therefore we're going into the markets, especially given the fact that the US market sold off yesterday. The Nasdaq itself had quite a considerable sell-off. I mean, if we just go back to the Nasdaq chart here, we can go to a daily chart, and what do you see there? H&S formation. So and obviously we sold off quite substantially, so therefore the bias was down. Given the fact also, if you look at the S&P 500, look at the daily chart, obviously it isn't looking very strong right now. Okay, given the fact that the 1880 level is certainly a solid resistance and the 1850 level is acting as support, so we're just basically dancing around that level. Okay, on the verge of a potential H&S potential breakout. Okay, so breakdown, should I say, not breakout. Or break out this current range anyway, southwards. So that's certainly not looking good. Okay, if you look at the Dow Transportation Index, if we can go to a daily chart there, and as you can see, we've been stuck at double top now for quite a few days. Whether we're consolidating to make a new high, or whether we're on the verge of a breakdown, is again yet to be confirmed. So with regards to the Dow H&S, that's certainly active, as you can see there. Certainly watch out for that particular pattern for it to play out. So that's all certainly not looking good for the actual FTSE itself or global markets overall. Okay, so with regards to obviously the fact that the FTSE itself rallied in the morning quite substantially, and given the fact that the inflation numbers were leaked, I mean that's all insider trading. That literally, I mean obviously you did have some reports from two companies in the morning that were relatively good in terms of economic growth, but again, this is just blatantly just spells insider information. Literally, I mean, why would you be buying the FTSE itself in the morning? And again, the other factor as well, not just inflation numbers that were leaked, but also with regards to the leak, with regard to inside information of front running, with regards to negative deposit rates in the eurozone. So that was another factor as well. So that certainly added to that. And obviously the German DAX rebounded quite powerfully in the morning as well, even before any news flow came out. And news flow was supposed to be 9 o'clock with regards to German data, and even the German data was quite mixed, although overall positive. So we're just looking at the German DAX itself. Obviously you can see here from the outset, boom, off we went for a rally, for a nice rally there. So and again we've left an unfilled gap on the German DAX as well. So It's going to be tricky. We'll see exactly what happens in Asia overnight. Any weakness in Asia, obviously, this certainly closes on the downside, especially now given the fact that Draghi has taken away the argument for negative deposit rates. As you can see, Euro USD rebounds as Draghi trims rate cut hype. Analysts say he insinuates interest rates will remain the same, less dovish than other ECB members. So obviously there's a dichotomy there, or a certain level of disagreement, okay, with regards to the interest rate policy in the Eurozone, okay. So, and obviously the most important chap in the Eurozone is Mr. Draghi. The rest are all puppets really, aren't they, from that perspective. So they'll obviously attempt to talk down the euro, but until he actually talks it down, it's everybody else is irrelevant. So obviously there were the two factors that caused the FTSE to rally, so it's very important you realise why the markets move. Something that I was discussing with one of my mentorees today, one of my students, as to if you understand why the markets move in any particular direction, then it becomes very easy to put the jigsaw puzzle together and work out when the market will move in the opposite direction, okay. So once you realise, remember, the market is like a goldfish. It only focuses on certain news flow or tidbits of news, and obviously will move accordingly. So if you understand and you pick up and you pick up the noise, or you have the ability to differentiate between the noise and realise what the market is actually focusing on, okay, and not get caught up in the noise to a certain extent, then you have the ability to realise what the market's focused on, given the fact that it's a goldfish. And obviously, given today we were focusing on negative deposit rates, hence the reason why we had a short squeeze in the Eurozone. And obviously with regards to the FTSE, we had inflation data leaked, hence the reason why we actually short squeezed higher on the FTSE, expecting obviously a lower inflation rate, keeps interest rates at bay, keeps the currency at bay, and obviously allows the FTSE 100 to advance. And that's exactly what happened. Okay, so that's basically the backdrop that we have. Obviously, we've got the Russian troop movement, obviously very active on the border. Mr. Obama himself obviously has been quite vocal with regards to Russia as well, given the fact that he's here. So that's certainly certainly something in the background. Okay, so U.S. President Obama worried about further Russian encroachment. Okay, bit of a hypocrite there, to be honest. He himself invades countries and he expects others not to do so. It's not a very good example, is it? Okay, anyway, so let's go back to the markets. And so that's basically what the overriding fear or concern is right now, okay? So let's go back to the FTSE itself. Let's have a look at the daily charts, see if we can get a bird's eye view now that we know what the 10 minutes are. Okay, so basically you've got a bullish engulfing candle, but we're back into resistance. So this is your level of resistance here around the 6610. Okay, so that'll certainly be a solid resistance level. The next level above that, let's just have a look, is going to be around the 6630 level. So that's two levels of resistance that we're focusing on, and that's basically where the markets are certainly going to find some trouble, okay, penetrating. And again, it's the 38% retracement level as well, so 6620, solid resistance, and that's exactly what I expect to hold going into tomorrow, okay, on the daily chart. So let's just have a look at the FTSE 250 and 350, see if they try and confirm that. FTSE 250 inside bar, so again, this is just basically a bearish consolidation pattern. Obviously next move now we're looking at testing the lower channel there, so I expect this bear flag to play out given the fact that it's an inside bar. Down we go on the FTSE 250 going into tomorrow. Okay, let's have a look at the FTSE 350, see if we can gain anything from there. Okie dokie, so FTSE 350 again, so yeah, bullish engulfing candle, 200 MA held, and obviously we're back into that 6620 level, okay, so resistance, so 3620, sorry, resistance, so expect the resistance tomorrow, okay, with regards to the FTSE, okay. Let's see, have a look at the 60-minute chart, see if we can see a better, get a better understanding here. Okay, so yes, we have a inverted head and shoulders pattern, which I think I've already explained, going in with regards to the weekend video. I did expect 6600 to be tagged, okay. So we are back into this resistance now, although the inverted head and shoulders target is 6690, so obviously bear that in mind, that's the ultimate target. But for now, like I said, we are going to be encountering resistance. So you've got horizontal resistance there, which is 6630 again. Okay, you've got previous resistance previous support equals resistance there. Okay, so that's two levels of resistance that we're focusing on for now. So, and obviously you've got diagonal resistance, although we do look as if we've broken that for now, so we'll leave that for now. Okay, so 6630 from that perspective, I mean, we can certainly go back and see any key levels here. Obviously you've got resistance level around this region here at 6610, previous support equals resistance, and obviously you've got the horizontal resistance there as well. So there seems to be a lot of activity here around the 6610, 6630 level. So I'm certainly short 6610, expecting obviously a thrust lower, potential pullback here now for either we go back and test 6580 level, or we go back and we test this neckline. Okay, so we do need some consolidation here for a pullback, and that's mainly based on the fact that the Nasdaq is very weak. Okay, so bear that in mind. So the Nasdaq's very weak right now. The DAX is obviously into resistance as well, and that's basically what we're looking at from that perspective. Now, going back to the 10-minute chart of the FTSE itself, FTSE itself made a wall of resistance at 6600. So that's your wall of resistance. As you can see, we hit that once, twice, thrice. So 6600 is your solid resistance. We were making an argument here for a potential H&S, and it certainly is valid. So there's your head. So expect a move back to the neckline tomorrow, right shoulder, and obviously we break down. So that's certainly in the equation. So given the fact that that's your head that's been put in, so a potential double top here at 6600. Hence the reason why I've chosen 6610. I've chosen 6610 because mainly given the fact that if we do gap higher, then we should go down. And also remember the unfilled gap below, that is going to act as a magnet for the FTSE 100. So even if the FTSE 100 were to propel higher, then that magnet still remains 6520. That gap must close. Okay, so always bear that in mind. That's very important. So there's your resistance. Okay, now the other factors as well that we need to take into consideration, given the fact that the FTSE is very reliant upon the actual risk currency. So Aussie USD obviously is smack into its 200 MA resistance. Let's just quickly look at the NZD USD. Okay, NZD USD isn't looking as bullish right now. Let's just go to our daily chart on there. Okay, so so we've got a bearish engulfing candle. Obviously resistance has been held up here, double top resistance certainly has held, and now we're potentially looking to go lower now. Okay, that's basically where we're going to go lower. So let's here we go. So obviously you've got a bearish engulfing candle there, obviously on the Aussie, on the Kiwi dollar, sorry, and obviously now we're looking for a potential move lower. So that again supports the argument of my foot short Aussie. Okay, so bear flag formation, down we go, and obviously that doesn't bode well for the FTSE 100 going into tomorrow, given the fact that obviously the Aussie itself is a commodity currency, and the FTSE obviously is related. So expect this certainly to break lower from there. Okay, now we can certainly have a look at the yen pairs as well. So this is basically how I trade. As you can see, 10 minutes we're certainly hitting a wall of resistance. The market's struggling right here, and if you look at USD JPY, we can have a quick look at that. Again, struggling. It made a high, it's making a lower high at the moment, and it certainly wants to go lower. So certainly from that perspective, we are certainly looking at being into resistance. Now we can certainly look at the emerging market currencies as well. USD ruble, like as you can see, USD ruble is making a base. It wants to propel higher. If it propels higher, obviously the Russian ruble comes under pressure. Now obviously from that perspective, it's it certainly loses credibility, or loses the risk on factor. Okay, and that obviously puts the MySex under pressure. So given the fact that if you look at the MySex of today, let's just have a look quickly. The MySex itself obviously closed up 2%, so pretty impressive. The BST or BIST 100, which is the Istanbul index, that closed up higher as well. So 1.5% and 2% both higher, but both are into resistance now. So that's something that we'll keep an eye out for. And overall, I mean, the markets, as you can see, are quite bullish with regards to the activity today. Everything looks pretty strong except the Hang Seng, which obviously we know, and we'll see exactly what happens. So again, the main factor or main theme was obviously low inflation, and obviously talk of negative deposit rates. That obviously was a double whammy, smacked all the shorts, okay, and caused a nice short squeeze higher. So whether or not that transpires into tomorrow, again, we'll see. From my perspective, no, given the fact that Mr. Draghi himself has obviously talked against negative deposit rates, so he'd certainly rule that out of the equation. So anyway, folks, so I think that's enough for one day. Okay, so risk on, risk off, wax on, wax off. Take care. Good night.